All right. Welcome to the show, everybody. Another week of TSP happiness.
Wasn't a bad week. Could have been much worse. We shall see. After last Friday's big drop, we didn't do an immediate V bottom back to new highs, but we didn't collapse either. So it's called an inside week, and we'll talk about that a little bit at the end. But there's a lot going on.
Things. I mean, it's crazy. I did think of it as soon as we got off the podcast because we record this usually in the afternoon on Friday because we don't want to do it on Saturday. So, our subscribers to our site now they get analysis completely through the week, right? For the podcast, sorry guys, we're not doing the podcast on Saturday, so we can make sure we get all day Friday. So this is usually happening Friday afternoon, and sure enough, the market did a doozy on us last Friday after we had already done the podcast. And I was like, oh, well, this will be interesting to see how it plays out. But, like a lot of things, and of course, Monday was a holiday, but the market was still open. So, it kind of solved itself, which seems to happen a lot lately,
Yeah, if anything, this is a pretty good indication of some fear in the market and some concern. I mean, there hasn't been any major breakdown, certainly not on a weekly basis, and really not that much on a daily basis. I mean, last Friday, the market was down 2.7. The S&P 500 was down like 2.7%. But we haven't taken out the low from last Friday yet. And so as long as price stays within the range of last Friday, which it has done all week this week so far, we can still recover and the rally continues. If we break below last Friday's low, then things get a little bit different. And, like Con said, if you're a subscriber to the site, we'll be talking about that. But for right now, let's get on to the podcast, 19 October, 2025. So we always start off with these weekly economic highlights. That's a problem now because of the government shutdown. We'll take a look at what we're missing out on. And it's not just us, it's economists trying to figure out what's happening. Specifically in the US, it's awful tough without the government putting out the data that we need. The big news really was last week, which was what was the impetus to that almost 3% down day on Friday, is China came out with export controls. So we're going to talk a little bit about what those export controls actually are. And then right after that, obviously the president put on an additional 100% tariff on China and then kind of walked that back. So that's apparently why the market's kind of rebounded a little bit, but we'll talk through that a little bit. And then Bitcoin, I have a chart of Bitcoin versus the S&P 500. Bitcoin is a pretty good indicator of risk on versus risk off mentality. And so when Bitcoin is going down, the S&P 500, the NASDAQ, anything that is kind of risk assets tend to go down or up with Bitcoin. So we'll take a look at that and see if Bitcoin, which has been going down quite a bit in the past couple of weeks, what that tells us about what could happen with the S&P 500. And we'll take a look at a chart of the S fund because it is at a pretty critical level, and then the TSP fund direction with the C fund. So we use tradingeconomics.com. That site puts out all the data. You can sort it by individual countries, different sections of the world, different kinds of data that you want. But we usually do all the important economic data for the week. Well, most of that data comes from these four government agencies: Bureau of Economic Analysis, Bureau of Labor and Statistics, the Census Bureau, and the Department of Commerce. And so those, I don't know, if anybody who's from those agencies who's still at work might be saying, hey, we're not shut down. The data that we get through Trading Economics is not coming from those agencies. So, and most of that, the really important stuff for us, non-farm payroll data, unemployment data, which is critically important right now. CPI and PPI are the biggest inflation data points that we use. GDP is a big one, and personal income and expenditures, right? All the things that we talk about every week, we're not getting that data as long as the government shut down. So it's bad for us. It's much worse for people on Wall Street that are really trying to figure this stuff out. Next Fed meeting is October 28th and 29th. So that will be the 29th will be the Fed decision on the next interest rate policy. The idea has been that the expectation is another 25 basis point cut in the Fed funds rate. It's expected due to concerns of weakness in the labor market, but we don't have the data. There's a lot of other data you can look at, but we don't have the actual employment data that we usually look at because it's not coming out of the government right now. So it's much more of a question mark. I don't think it's really much of a question. I think they're probably going to cut again, but there's not going to be super recent data to support it. And the intention is to bring borrowing costs down to encourage hiring because unemployment is not ripping to the upside, but it's not improving either. Okay, so China export controls. This was really will go into this week and going forward. So what actually happened? China is now requiring special export licenses for products containing even very trace amounts of Chinese origin rare earth elements. So you've been talking about the president, or you've been hearing the president talk about the rare earths, right? It's been an ongoing theme for most of the year. These rare earth elements kind of focus around magnets and high-tech semiconductors and basically things that go to defense products and electric vehicles and very high-end electronics. And so we get most of that from China. And so China is now putting on these special export licenses, and they are denying export requests for items destined for military use. So that is a big problem for us. It's going to be really interesting to see, because if these export licenses and restrictions stay in place, the U.S. is going to need to come up with some different supply chain particularly for the military and defense sectors, and that's going to take some time. So we'll see what happens with that. So because Chinese export controls are heavily focused on rare earth elements, magnets, related components, U.S. firms most exposed are defense and aerospace, electric vehicles, robotics and automation, high-end electronics, and semiconductors, right? Anything that's made with semiconductors. So all of this is the majority of the Magnificent Seven. So it's going to be key to watch NVIDIA. Some of these other companies that really depend, the Mag 7 companies that really depend on inputs that are rare earth materials from China. And as we know, those are the majority of companies that are holding the market up right now, which is, again, why we had a big drop last Friday. So this is something that could be a problem going forward. Okay. Bitcoin and the S&P 500. So this is a daily chart of Bitcoin in candlesticks and the S&P 500 in blue. Okay. And we're going back to May of 2021. So what we're taking a look at is Bitcoin and the S&P 500 tend to move together. So this chart is one chart overlaid on top of the other. It's not a percentage chart. It's not showing how much one moves relative to the other. It's just showing the relative direction. So basically, when the S&P goes up, Bitcoin's going up at the same time, right? They go down together. They tend to go up together, down together. Okay. So Bitcoin is a pretty good indicator of when investors are feeling risk on, meaning they want to invest in risky assets. Bitcoin tends to go up first and go down first, and the S&P kind of follows a little bit. So these rectangles that I have pointed out here, you can see we have a top in Bitcoin, and the S&P is still going up, right? Bitcoin rolls over here, and the S&P is still going up, but eventually they both come down into that 2022 bear market. And we had the same thing going into the April correction this year. We got a top in Bitcoin. The S&P is still going up. Bitcoin comes down, and eventually the S&P comes down with it. So where we are right now is this topping pattern in Bitcoin, and now Bitcoin is collapsing, and the S&P is still kind of hanging out up there. So it's going to be really interesting to see. It doesn't mean that the S&P has to roll over because Bitcoin did, because we have the same kind of divergence here. Bitcoin was coming down right in the middle of 2024. The S&P was still going up. We did have a little pullback here, but then they all, regained and started going back up together. And in the big scheme of things, we didn't have as big a drawdown in the S&P as we did in Bitcoin here. So we don't have to get a significant move down, but this collapse in Bitcoin is definitely an indicator of risk-off mentality. Okay, so it's a caution flag. Okay, it's kind of do or die for the S fund. So depending on who you listen to, S fund is basically small caps. You could follow the Russell 2000 index. The chart looks a little bit different on the Russell 2000 than it does with the S fund, but it's basically a small cap, small company index, small U.S. companies. So we put in a top in November 2021. We got a little bit above that top at the end of 24. Pullback, hit resistance at it again, came down into April, and we finally got back above it, right back here, in July or so of this year. It hasn't really exploded to the upside, right? And now it's doing this kind of sideways channel. If it breaks down, we really want to see support somewhere in this channel, because if the S fund, if small caps are going to continue this rally. So we've seen a huge rally in the C fund, which is the S&P 500, which is big companies, right? Big cap companies. Rotation is, they say rotation is the lifeblood of the market. So what tends to happen is the big cap companies, money piles into it, they rally. The S fund, the small caps kind of go sideways, right? Small caps have been going sideways since the end of 2021. If the big cap companies start to pull back a little bit, we want to see money rotating from big cap into small cap, which means the S fund goes higher. If everything rolls over at the same time, this is basically, in hindsight, going to be looked at as a triple top, and it'll come down. But if you're bullish still in this market, you definitely want to see this sector rotation and money moving into small caps, and the S fund breaks out of this range right here. So the S fund is a pretty good one to watch right now. And then finally, basically TSP fund direction, because we use the C fund as kind of the overall direction of the market in general. And so this is what Conan was talking about. We didn't have that big candle in last week's podcast because the whole thing happened on Friday after we had already recorded it. So last week was the first, they call this an engulfing candle. It engulfed 1, 2, 3, almost 4 weeks, right, of price action. Right? Almost, well, three weeks, right? All that was engulfed in 1 week. And so that's a really bearish candle, right? You tend to see that candle at the beginning of any major, or significant correction. You tend to see a big candle. The second candle is the one that you really are watching for, which is what's happening this week for us. So if you get another negative candle, that's not a good indication, right? You get another negative candle, it's likely that the market is doing a more significant correction. But just because we get one, negative candle doesn't necessarily mean that we're going down. Let's see. I'm sure I can find one here somewhere. Like this. That was a pretty big red candle right there, and the market picked right up and kept on going. So there's no guarantees. One, like we say, 1 day does not make a trend. 1 week does not make a trend. Now, if we fast forward to where we are right now, this candle, you can see it hasn't moved very much from the open to the close of the week so far. Within the week, we got as high as the top of that thin line. It's called a wick. We got as high as the top of that, and as low as the bottom of that wick. So all the price action this week was contained within last week's price action. That's what's called an inside week in this case, because we're looking at a weekly chart. It could be an inside day, right? But this is an inside week. So all the price action that happened this week happened between last week's price. So the theory is that an inside week, you could say it doesn't mean anything, or you could say it means indecision. The market doesn't know which way it wants to go, especially if you have the same length of a wick on both sides. It's saying that the bulls are pushing price up. When it got down to the bottom of the wick, bulls started pushing price up. When it got to the top of the wick, they started pushing price down. And there isn't much difference between the open and the close. So it's a sign of the market isn't sure which way it wants to go. It tends to be a continuation pattern. So when you see like this one, right? We had a couple of down weeks. We had a continuation pattern, and then the decline continued. You also have it on the upside, like right here, right? The market was rallying. You had that same kind of indecisive week, and then the market kept on rallying. So this is not a bullish sign. It's not super bearish, but it's definitely not bullish. And this is not a good look, because relative strength, the blue line is below the moving average of the relative strength. So we don't like to see that. And the MACD is trailing off, which means the power behind the rally in general has been declining for the past several weeks. So just something to keep an eye on. Doesn't mean the market's getting ready to tank, but it's definitely worth keeping an eye on. If you're a subscriber to the site, we take a look at what's happening on a daily basis. And as you can imagine, there's a lot more to talk about in this whole piece right here on a daily basis versus a weekly. But if you're following TSP on a weekly basis, we are still well above that 20-week moving average line. RSI obviously is way above 50, and the MACD is still positive. So the trend is certainly still up, but this is a pretty big red flag. Okay. If you like that kind of analysis, definitely check us out at growmytsp.com. We put out a whole lot more for our subscribers than we're putting out on the podcast. So definitely check us out. And if you have questions, you can certainly post them at growmytsp.com.
Wherever you find the video. There's usually a comment section wherever we post a video, like Facebook, YouTube, Instagram, what have you. And if you have a question, put them in those comment sections. We check them. We don't normally check them like live time. So if you want to have a conversation on there, we're probably not there. But our folks get the stuff to us. And if you don't have a comment section wherever you find it, you can always send us an email, support@growmytsp.com, and the support team will get it over to us. If you guys like this stuff, please share it with your friends. There's a lot of your friends out there, our friends too, because we're retirees from the Gov, that are very anxious right now, right? I talk to a lot of not just Govies, but contractors that work for the Gov. A lot of people are anxious right now, and you can imagine that's it's not surprising. So you should be thinking about your retirement account, even outside of times like this. But even now, this is one less thing you need to worry about. So if you have friends that are feeling that way, send them our way. If anything, share the podcast with them, because it does help to kind of take that off the table as one more thing to worry about. I mean, some people are worried about whether they even got a job tomorrow. So that's an extraordinary time in the government, because it's usually the most stable place to be, no matter what the economic situation. So we're thinking about all you guys out there on the edge of your seats, and hope the best, and hope they get this sorted out. And again, if you like it, share it with your friends. If you don't, share it anyway. We'll see you guys later.